Broadcom is pitching a deal to acquire Qualcomm for more than $103 billion in a combination of two semiconductor giants that are crucial to the speed, functionality and cost of smartphones. The deal, which amounts to $130 billion including debt Broadcom would assume, amounts to the largest ever technology acquisition. And the combined company would create a global tech company with about $51 billion in annual revenue and major customers such as Apple. Broadcom publicized its proposed acquisition in a letter to Qualcomm that was sent to investors and the media Monday morning. It was not immediately clear whether Qualcomm plans to engage Broadcom in discussions or fight the proposal. Broadcom offered to pay $70 per share for Qualcomm, with $60 in cash and $10 in stock. Qualcomm, QCOM, shares were up 4% in early trading Monday at $64.44. Shares rose more than 12% on Friday after news reports detailed Broadcom's potential bid. Broadcom, AGO, shares rose 2% in early trading Monday to $280. The company said it would maintain its offer regardless of the outcome of Qualcomm's ongoing effort to acquire NXP Semiconductors. The San Diego-headquartered Qualcomm made its $38 billion bid in October 2016 for Dutch-based NXP, which is a major provider of global automotive semiconductor sales. This complementary transaction will position the combined company as a global communications leader with an impressive portfolio of technologies and products, Broadcom CEO Hock Tan said in a statement. "We would not make this offer if we were not confident that our common global customers would embrace the proposed combination," Tan continued. With greater scale and broader product diversification, the combined company will be positioned to deliver more advanced semiconductor solutions for our global customers and drive enhanced stockholder value. Qualcomm's board of directors will assess the bid, the company said in a news release Monday, to pursue the course of action that is in the best interests of Qualcomm shareholders. A merger of Broadcom, which specializes in wired communication technology, with Qualcomm, a wireless telecommunications giant, would make strategic sense and would be highly accretive, bringing two communications powerhouses together ahead of the 5G technology cycle, said Christopher Rowland, an analyst with Susquehanna Financial Group, in a note to investors Monday. Broadcom's bid also provides an explanation for its announcement Thursday that it plans to move its legal headquarters to the U.S., he said. In an event at the White House, Broadcom CEO Tan said the company would move its headquarters to Delaware. Currently, Broadcom has twin headquarters in San Jose, Calif. And Singapore, which came from Thailand-based chipmaker Avago Technologies' takeover last year of Broadcom. President Trump announced Broadcom's plan and Tan complimented him for seeking corporate tax reform. The proposed tax reform package would level the global playing field and allow us to compete worldwide from here in the United States, Tan said in a statement. Broadcom's move to the U.S. would make it more likely to close the $5.5 billion bid it made last year for data center connectivity company Brocade and the Qualcomm deal. Qualcomm developed CDMA communications technologies used by smartphones on networks by Verizon, Sprint and other carriers. Had Broadcom proposed this bid and remained co-headquartered overseas, we don't think the U.S. government would allow those technologies to leave to a Singapore-based entity, Rollins said. Still, this merger has significant regulatory hurdles because the combined entity would dominate the high-end Wi-Fi market, he said. Both Broadcom and Qualcomm supplied parts for Apple's most recent iPhones, including the iPhone X. However, Qualcomm and Apple are engaged in a dispute over how much Apple pays in licensing fees to Qualcomm. Apple sued Qualcomm in January, while Qualcomm in July sought to ban the import of iPhones to the U.S., citing infringement of its patents.